Alright, hello guys, glad to have you on board again today. It's been quite a while since we've updated on the intraday timeframes, by intraday just mentioning anything that is daily and below. And just for the sake of consistency, we're going to keep on updating the regular assets that we've been following throughout 2024. Even though I've mentioned 2025 structure might be changing in terms of educational content, so I'm not necessarily sure that I'm going to keep those intraday forecasts ahead of 2025. Anyway, it's been a long time since we've updated, so there's been some community requests that we make it happen, so that's essentially what we're going to be doing today. So just having a look at what we were doing back in 2024 and just update it one more time until I try to figure out a more appropriate kind of context to reframe those podcasts. So we're going to review the same old things like the S&P 500, a few commodities, silver and oil, if I remember correctly. We're also following cryptocurrencies. So let's just keep it and stick to the plan. So ideally, the S&P 500, remember, is just in a very, very complicated market structure, meaning that I'm looking at it in the daily chart. And remember that the flow context is in 4 hour, as the current low risk context is in a monthly divergence pattern. So we're looking for a market top. Remember, we've had that 3 flow sequencing that's essentially pulling itself that way. So that was flow number 1. Oh, sorry about that one. So that was flow number 1 somewhere in here. Very complicated kind of range structure. The second flow was in here. The third and final flow triggered in here. Terminated there from my personal trading activity because we had the third range boundary there. And as you can see, it's been extending since then for very long periods of time. Essentially, this thing terminated in May last year. So we're essentially 1 year in an extension that has created yet another third range boundary. It has been broken as well. And this one is like the third one. So it's the third time that we're actually breaking third range boundaries in the sequence, trying to go towards infinity. And we've said this is very, very dangerous though. The thing is that we're in the 4 hour chart, so zooming in, we said the 4 hour range is very extended. The first third range boundary, the one I exited, the second one in here, there was somewhat of a delayed third range boundary, so got broken above. As you can see, prices not managing to create the first bearish corrective flow, so just essentially just keep on pushing higher endlessly and failing to install bearish consolidations. And same one is happening in here once again. You would see we have context to context, rebouncing, so yet another delayed third range boundary, and the market seems to want to break beyond. So we're now at 5 range boundaries overdue. Remember that this is not breaking all-time highs. This is just once again trying to cheat people in. So just to say, we got 1, 2, 3, 4 range boundary. We're at the 5th, and we're waiting for potentially creating the 6th. So now the S&P is just flat ranging. That's the third time. Remember, third is the charm. So essentially, I'll be very much more cautious buying into all-time highs now. But nevertheless, history has told us that multiple times in the past, the S&P has fucked the bears. So reason why, remember that the overall structure is now we're waiting for that first flow, and that first flow has to set a few rules. The few rules are that the moving average has to flatten or start to reverse, and that the resistance context has to fall below it. And so long as it doesn't happen, well, we don't have that first flow. The first flow needs to validate. You don't have to trade it. Remember, you can't trade the first flow. You're actually going to have to leave it behind. This one has to be plotted first so that you know the corrective sequence has started. So remember, the first flow is going to play its game. The second flow can be traded either at the moving average or the Bollinger Band, and this one is much safer to get along with. So until then, the S&P is still in this market mood, which means you can't be a bull, but you can't be a bear either. You're just essentially going to have to let it behave. So the suggestion has always been the same. If you really want to play the game and play the flow sequencing with low-risk trades, you really want to be out of this market, not being a bull, not being a bear yet. Waiting for the bears to show strength, and whenever they do, you'll be one then for sure that there are going to be consistent consolidations following through. Hence why I have also advocated in the longer-term time frame forecast and the weekly charts that if we start to trigger that bearish sequence, it's probably going to take years until the S&P 500 terminates the corrective flows. And if we're actually triggering the monthly top that I am mentioning, we might even get 3 bearish flows this time around. Remember, the bears might terminate a full circular cycle. So if that happens, we're definitely locked in for consolidation in the years to come in the US. Now, the truth is that so far none of this has happened, and the only thing that we have been assisting is essentially seeing the market going higher and higher forever. So we'll see. As I said, these are the statements that I can say for sure, is that the flow sequencing has terminated last year in May, and since then we've just keep on pushing, and there's no signs of the bears taking any significant piece of control. Whenever they do, they will take control for years. That's what we can say. Until then, those who trade the first flow are only people who are either risk managing for their portfolio exposition or doing any all sorts of counter trend trades. That's essentially all there is. The trend is, for now on, extensively bullish, even as well in the major time frame. It's just we're overextended. It definitely shows signs of exhaustion, hence why portfolio exposition must be managed for those who have long-term portfolios. For those who are flow trading, once again, nothing can be done. You just can't be a net bull or bear in this market. You just have to let it play. Okay, so that's for the S&P 500. Now, moving on, we have assessed, I remember, the WTI. So in here, we were in much larger time frame for flow sequencing. This is essentially in here, we said that it could be on the daily chart. We have clear validation, but when you look at the context plotting, it's definitely just overextended all across the board. So hence why we've said there is a likely probability this actually shows signs of existence of that flow sequencing in the higher time frame, which could potentially be validated in a weekly chart. We're just lacking of a third range boundary. But we have evidence of mature range patterns in here, and boy, everyone has seen that we're actually consolidating in that nasty triangle pattern. So it's essentially, to me, a mature range of some form. Question is, there is still the pending risk of a potential third range boundary to build at the context. So if we were to go up there, question is, what's going to happen? Are we just going to reject on that third range boundary to go play the pattern as it should be, which means buying back up, back down to the moving average, which to me is a very viable probability. Remember that we are playing the pattern as it is, and the pattern says we need to have a third range boundary. So far we don't. So we might have a rejection there all the way back down to the moving average, where there will be an absolute long-term buying opportunity. Therefore, there is a huge risk management area that's going to happen there. And we've mentioned that one last year. It still hasn't happened yet, but be very cautious with that. The way I'm personally going to manage the risk out there, it just depends on the signals. Like I said, if I have strong bearish rejecting signals associated with that kind of closing Bollinger Band, these are the kinds of things I will honestly probably take some partial profit on, just for the sake of potentially retracing to my average entry prices. So that's all there is. But also assess that there's a very likely probability where we just fuck it all up and start to trigger the second flow out of nowhere without necessarily retracing, essentially leaving everyone behind. Though, like I said, it's going to be a matter of risk reward management depending on the signals. It can, to me, say just one thing, is that there's going to be a mandatory profit taking there. The size of that profit taking is going to vary depending on the signals that I'll have out there, which means these are requiring information that I don't have yet. But I will definitely not take all my profits, that's for sure, just because there is a very likely probability where things go out of control for WTI. Now coming for silver is the same kind of reference time frame in here, where the weekly chart is clearly where the balance is at play. We've seen in here the third range boundary is played in here as a delayed sequence. So the third range boundary was already there, but the moving average. Remember, silver was kind of a trade where everyone was doubting because it was taking too long, blah, 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 and we just consistently pulled back to the moving average until boom, we finally got in here, broke the all-time highs, or broke the previous highs, though validating and confirming the flows, meaning all your trades are now at break even and you let it behave. So it's exactly the way it is. Now we're at the stage of where that pattern is essentially having the context boxes rising above the rising moving average, which is a mandatory step for the second flow. So this tells us one thing, is that the second flow has still room to grow because it's essentially just validating intermediary kind of maturity. The late maturity stages will be potentially, to me, when we start to see breakout targets and all sorts of things, where this will be areas for me to start locking on some gains, well-due gains. But of course, remember that after that, you don't have to lock it all out, like essentially just taking some nice well-deserved gains, but essentially just to say that these are the areas where there will be likely probabilities to retrace to the support context, creating the exit third range boundary, where you need to take all the profits. Okay, so remember, anything you do in here, like preemptive profit taking, on like breakout targets or things like that, are just partial profit taking for kind of risk management perspectives. Whatever you take as a profit here is something that you're going to have to put back in the market on any significant drawdown. So that's all there is, okay? Don't take your profits too soon. On those flow sequencing, you know for sure that there's one thing you need to get to abide by is the rule. And the rule says take your profits on the third range boundary, not just out in the middle of nowhere for dubious reasons. So that's really the way it is. Okay, so that's for silver. Now moving on, we have cryptocurrencies. So we're going to go on to Bitcoin. Remember, Bitcoin has a flow sequencing that is now complete, as we have made first, second, and we're making the third flow now. It's in the 4-hour reference chart here. And as you can see, we have made most of the third range boundary plays so far. So hence why I tend to say the third flow started on the Bollinger Bands and is now due for maximum exposure, which means to me we're on the third range boundary. We already had the third range boundary plays. So to me, the flow sequencing for Bitcoin is terminated. I'm not necessarily a bear, it's just saying that now Bitcoin has made and delivered. And by delivered, that means the sequencing is terminated. That doesn't mean it's going to have to stop. Remember, this is exactly the same sequencing as the S&P 500. And as you've seen, the S&P 500 has broken third range boundary multiple times. So it's not a time to be a bear on Bitcoin. It's all about time to say Bitcoin has delivered, the profits should be locked up. And that's all there is. There's no more bullish rationale to me to support Bitcoin anymore. And just like we stated, you just can't try to expose yourself into selling the first bearish corrective flow. That is going to happen because it could very well happen later. All you know is that let the first one happen and you're going to be able to be a net bear selling the second consecutive flow. Okay, so that's all there is for Bitcoin. So for now on, it's just let it play out. Don't be a bear. Don't try to sell too soon, but you can't be a bull anymore. You need to have locked on your profits. Okay? Now for Ethereum, it's a totally different story because in here, even though people tend to say all the cryptocurrencies have to go up or down in the same time, which is absolutely bonkers stupid, we need to make it very plain simple. The structure here is slightly different as Ethereum has the same sequence for first and second flow, very similar to Bitcoin, but this one is that the third flow hasn't started yet for Ethereum. It's been an absolute pain in the ass for everyone who's been trading ETH, me included, because essentially we had the first buying opportunity on the Bollinger Band here. Remember that we've been violently attacked in here with the Bollinger Bands expanding and the volatility alerts on the lower time frames. Most people in here have been stopped, but remember that when we were buying in here, the maximum stop loss was in here at 1500, and this is where your stops should be now, or below that level, okay? That's really all there is. Everyone in here has been taking too much risks. Essentially, remember that Ethereum has tremendous gains to deliver, though many people have been taking this as like a granted free money stuff. Like essentially, yeah, let's buy with more money than I can afford, and essentially putting a tight stop loss. The idea here is that if you've done that, well, you've been among those people who've been stopped out. So the message has always been clear. Ethereum is going to deliver a lot, so you should tolerate more risk and try to put your stop losses as far away as you could possibly do. And you've seen that, boy, this market is just trapping everyone like crazy, because there were everything in here suggesting that we've already had some kind of vicious attack on Ethereum and that we were due for the third flow to finally succeed. But remember, we've always said we need to break the previous high points in order to put your stops at break even. And so many people in here were just, oh boy, it's been so long, now it's going to happen. And those people might have preemptively put the stops at break even. So if you bought in here or in here, put your stop at break even because right in here you think it's obviously going to go through, and well, what a surprise. Once again, you get yourself fucked up in a volatility attack. So yes, these attacks are vicious, they're stupid, and like I said, they don't break the structure altogether. The structure remains bullish as fuck, and I'm just really swearing for obvious reason here. This market is under heavy, vicious attacks. It's happened so many times, but the structure itself remains intact. And therefore you should keep exposing yourself. Hence why I said Bitcoin might be at the end of the structure, but it can still extend higher, but Ethereum has yet to deliver, and there is a lot of gains to be made. And doubling it down with the fact that there are clearly some vicious attacks on the token, that doesn't change anything to the structure. I'm always bullish as fuck on ETH. That's what I'm said. And you go stop me. You need to go below 1500 to stop me there. Atom is yet another token which hasn't been easy to navigate. Remember that one is in a flow sequencing in the 4-hour chart, creating this massive wake of pattern stuff. We've had that first flow that was nice to trade, and we've said that following this third flow, this first flow, we're going to be waiting for a third range boundary. So we had the context to context, rebounds, making that new low, and then reversing the context. So this is where the third range boundary happened, delayed third range boundary though. And the idea was buying at the moving average, which is exactly what I have done. And boy, in here, same thing. When you're buying in here, where's your stop loss? Below the previous low point. Remember? That's exactly it. Though you know the stops must be there, below the 3.6 mark. And if you've put your stop losses there, you haven't been stopped by this vicious attack. If you did anything else, like trying to be more greedy than you could afford by buying more with tighter stop losses, and then you've got flushed out. So it's essentially the same thing. I think Atom is under huge financial pressure and vicious attacks, just as much as Ethereum. And yes, I have shared my vision on these two markets, and I believe these are the future, and the fucking rest isn't. But once again, I have structures to back those claims. And all I would tend to say is that despite the vicious attacks on ETH and Atom, they both have the same viable structure with lots of gains to potentially deliver on. It's essentially just that. Okay, so try to get yourself not stopped out because you're too greedy with tighter stop losses. Just try to respect the rules. Put your stop losses where they're safe enough to behave. And that's all there is. Now, Link is also another asset that has an interesting flow sequencing. This one is sequencing on the higher time frame. Remember, in here, this one is valid on the daily chart because we've crossed the moving average and so on. We've had the consequent third range boundary and bought the moving average afterwards. Though definitely good structure here. And as you would see, many people see the crypto market as a whole. Like everything has to go up or everything has to go down. Everything is synchronized and blah, blah, blah. Truth is, if you follow those rules, you would figure out absolutely different conclusions. The first one is they're trading on different assets. They're trading on different time frame flows. They're trading on different flow sequencing. Some have terminated. Some have yet to come. Some have been invalidated. And some have going bonker crazy shit like going to infinity without following any known structure so far. We're going to look at it afterwards. But essentially, when it comes to Chainlink has validated second flow by breaking the previous high points, breaking the third range boundary and so on. We have crossed the context above the rising moving average, which is maturity stage, and we are now making context to context. So Chainlink could do a delayed third range boundary or just once again go higher. So all I would tend to say is that Chainlink is at the crossroads. I personally have taken some profits in here because that was a technical target for me. And we've had all evidence that taking some profits in here was actually a good point. Though now the question is, of course, what did I do with those profit takings? I bought the supports. So that's just the way it is. I'm back into Chainlink trading the second flow because for now, to me, it hasn't terminated. It's just as simple as it is. If it terminates, well, that means it needs to reverse the context in here. And we would tend to say that it essentially has made a delayed third range boundary. So far, the context hasn't reversed. And even if it does, that means I'm going to patiently wait for the Bollinger Band to catch up. And that means Chainlink will probably be a net buy somewhere around mid this year. For now on, we're going to have to wait for this Bollinger Band to come up. And now on, it's at $5, which is below the previous low point. So it makes no sense to forecast a Bollinger Band drop price. It's just essentially, if this thing has terminated second flow, it's going to range for a long period of time until the Bollinger Band goes back up, where I'm going to buy it again. Okay? So that's essentially it. I just think Chainlink has a lot to deliver. I think it's been another kind of asset that has been viciously attacked. And it seems like, yeah, the crypto market is attacking the most worthy tokens just to buy the shittiest ones. One example is Solana. So Solana had a flow sequencing, which was essentially a first flow in here, very narrow one, 4-hour chart, and a very, very, very long kind of second flow, crazily overextended. Once again, the second flow was like 6 or 7 times the violence of the flow preceding it. We had the Bollinger Band buying opportunity for the third flow that happened. Let me just show it right here. Okay. So this is where you bought for the third flow. And as you can see, the third flow has terminated. Boom. You should have exited that fucking thing in here or in here, depending on your assessment for the third range boundary positioning. But clearly and simply, this thing has terminated, which means you can't be a bull on Solana anymore. That doesn't mean Solana will go bear. Remember that one. Remember that you can't sell the first bearish flow. One thing is for sure is that Solana might be on the verge to do it. Now the moving average is flattening, and if the bearish context is crossing below it, that means Solana is done. is going to set two corrective flow. First one might be there, then retrace, and the second one. Okay, so that means if Solana is done, it might have a lot to lose. If Solana isn't done, which is pretty much following Bitcoin's trail, it could go higher and kind of trying to inch higher, but to me, the rewards are not worth the risks, because essentially the pattern has terminated. You should have locked your profits on Solana. You can't be a bull anymore. You just can't be a bear either. So remember that one. It's very critically essential. That's the same as Bitcoin. That's the same as the S&P 500. You can't be a bull. You can't be a bear yet. So get to wait for it, okay? And also assess the fact that if anything comes and hit the market, those ones are going to be the ones that are going to lose the most, because the others still have bullish flows for support. That's all there is. So I'm going to leave you guys with that. And oh no, maybe just a last one, just for fun. And like Ripple. Ripple has absolutely no structure. It's absolute bunker shit. It's just like, as you can see, going out of nowhere into crazy territory. The best you could come up with would be a 4-hour chart kind of sequencing, which would essentially be like, yeah, out of nowhere. And to me, there's no long-term support out of this. You would say, yeah, maybe there's somewhat of a first flow here, even though the context hasn't really done anything significant. But let's say, okay, we've got a first flow. The second one is like 10 times or 20 times the size of the first flow. So good luck with that. Absolutely crazy stupid. And like I said, there's no flow sequencing out of there. It's just absolute bunker shit. Just look at where the Bollinger Band is. It's in zero price. That means this thing could collapse altogether, go all the way back to where it was. There's no flow sequencing there. It's just bunker shit. Like I said, this thing bears no value. People have been buying into it for absolute no utility, so be very cautious on that one. Like I said, there are charts that show a true legitimate price construction, which probably is something you can trade following a clear set of rules, and there is all the rest. Essentially all the shittiest tokens that might have made 6 or 7x or whatever returns, they have no structure. They can go down just as much as they went up. So like I said, some have value structures well known, and all my work is published on open source. You know everything about my patterns, there's nothing hidden, and you have access to pretty much the same information as I have. So it's essentially just the way it is. I don't say, trust me, bro. All I'm saying is just look at the patterns that I share for free. Just review them yourself. Just apply them to multiple charts to figure out for yourself how statistically relevant those things actually are, because that's all I'm saying. I'm saying that on a statistical basis, these things have no value underneath. Others have a structure well known and applied to multiple charts that doesn't belong to cryptocurrency sector or whatever. It's essentially working on any type of financial asset which you can study. And it's been working very well for the last 15 years. So either I'm the stupid dumbest one out there, or maybe the market is. And like I said, the market can be stupid for sure, but it will always go back to the mean. So that's really the way it is. I think we're in definitely stupid territory. We'll see how long it lasts. Until then, so long as you follow rules, you should be fine. You should be making money even if the market is dumb, and you should try to get yourself away from the dumbest trades. Just try not to fit into these patterns. Try not to fit into these stupid patterns. Just let them behave. So like I said, I'm not necessarily fighting against. All I'm saying is arbitrage opportunity eventually. That's all there is. Just don't try to be a net bear on Ripple, nor Solana, and all sorts of things. I just think they're way too dangerous beasts to trade on. But that's all there is. And like I said, can be a bull, can be a bear. Though if you can't do anything, just maybe stop talking about it. Okay? So all I'm saying is just get away with it. Bye, guys.